Hi everyone, welcome to the next video on variances, which is fixed production overheads. There are 5 different types of fixed production overheads, and in order to solve those variances, you have to know certain terms, which are as follows. These terms you should have already studied in your F2 paper in the beginning. If not, please make sure you're aware of these terms, otherwise the calculation will become quite tricky. So the terms that we have over here is the actual overheads incurred, that is the overheads that you actually incur during production. Then you have budgeted overheads. These are the overheads that you have planned according to your budget. Then you have expected standard overheads for actual production. So based on your budgeted overheads and your standard overhead absorption rate, these are the overheads that you expect to incur for the actual production. Then you have actual hours worked. This is the number of hours that people have actually worked in order to produce those goods. What it means over here is we do not include idle hours. This is not the number of hours paid. This is the actual hours worked. Then you have budgeted hours. So this is your originally planned number of hours to work. Then you have expected standard hours for actual production. So based on your standard hours per unit, you will know how many hours you should have worked for your actual production. And then overhead absorption rate, most important. Remember, the overhead absorption rate can either be per unit or per hour. For some of the calculations, we use the overhead absorption rate per hour. But if you have been given the OAR per unit, make sure to convert it into per hour. So once you're aware of these 7 terms, we can easily do the calculations for the overheads. So what we'll do is in this video, we'll look at all the 5 variances. I'll discuss them in detail, and then we'll have a separate video where we'll solve a question and calculate all the 5 variances. So the first variance, that is your fixed overhead expenditure variance. This is the simplest variance. It is basically just calculating the difference between your budgeted and actual overheads incurred. So if we were to write it down, we could prepare a formula something like your budgeted overheads minus your actual overheads incurred. And this is all there is to this variance, as simple as that. The next variance, fixed overhead volume variance, this is where things can start to get a bit tricky. This is the difference between your expected overheads for actual production and your budgeted overheads. So if we were to write that down, we could simply note it down as a formula where we could say this is your budgeted overheads minus your expected standard overheads for actual production. So whatever the number of units you're producing, you should be able to know how many hours that actual production would take, and hence how much would be your standard overhead to be absorbed. Then you have the third one, that is your fixed overhead volume efficiency variance. This is quite similar to your labor efficiency variance, where you're trying to compare how many hours it should have taken for your production compared to how many hours it actually took, and then you multiply that by the overhead absorption rate in order to quantify it in monetary terms. So in this case, we can simply say whatever were your standard hours required for your actual production and the difference between that and your actual hours worked. So this is the standard hours for actual production minus actual hours worked into your overhead absorption rate per hour. Remember, this is the overhead absorption rate per hour, not per unit. If it's per unit, make sure to convert it into per hour. And this is how you calculate the volume efficiency variance. Then you have your volume capacity variance. This is the difference between the budgeted hours and the actual hours worked. Now here, if your actual hours worked are more than the budgeted hours, that's actually a good thing, because in terms of capacity, you were able to work more number of hours than what you had originally planned. This is similar to your volume variance, where again in volume, if you have worked more, that's going to be a favorable. So we'll clarify this when we look at the example. So this is the difference between your budgeted and actual hours worked, and again we quantify it in terms of money by using the overhead absorption rate per hour. So in this case, we can simply say this is your budgeted hours minus actual hours worked into overhead absorption rate per hour. Now, before we move on any further, we have seen 3 volume variances. One was your volume variance. The other one was your volume efficiency variance, and the third one is volume capacity variance. So your volume efficiency variance plus capacity variance should always be equal to your volume variance. And then the last variance that we have is the total variance. The total variance is the difference between the actual overheads that you have incurred and the overheads that you expected to incur for the actual hours worked. Keep in mind, this is not the same as the expected overheads for the actual units produced or for the actual production, but this is the expected overheads for the actual hours worked. In F2, you might have already studied the concept of over or under absorption. Fixed overhead total variance is nothing but the over or under absorption. So if we were again to write it down as a formula, we can say it is the difference between your actual overheads incurred and your actual hours. Actual hours worked into your overhead absorption rate. So this will tell you the difference between what overheads should have been absorbed as per the actual hours worked and what was your actual expenditure. Again, your total variance is the sum of all the other variances, that is your expenditure variance and volume variance, or expenditure variance plus volume capacity variance plus volume efficiency variance. So this is how you calculate all the 5 variances. In my next video, we'll look at the question and we'll calculate all the 5 variances. If you have any questions, please feel free to email me or leave them in the comments, and hopefully all your questions would be answered by in the next video where we calculate the variances. Thank you.